then and look at public sector employment, because that's been a big news story so far this year. DOGE's efforts to curtail federal government employment. Well, we can see from this chart that it really hasn't had that much of an impact so far. Here we're looking at initial unemployment claims in Washington, D.C. Every Thursday morning, we get the initial unemployment claims data. With that data, we also get the state-by-state numbers. We get a number for Washington, D.C. These are non-seasonally adjusted. But you can see the recent pickup as government layoffs have picked up. But still nowhere near the spike we saw in 2021. Certainly nowhere near the spike we saw in 2020 or in other recessions. So the job losses have been muted so far. That doesn't mean that more aren't coming. Almost certainly more are coming. And keep in mind, this number is not going to include those federal workers who accepted a buyout. They're not eligible for unemployment insurance, and so they're not going to be included in the initial claims data. To this point, the data we have on hand suggests that 75 to 100,000 federal workers have accepted a buyout. Those workers will fall off non-farm payrolls at some point, so they'll have an impact on job growth going forward, but they don't show up in this initial claims series. Given the ambitions for the DOGE project, this initial unemployment claims series is very likely to spike further in the months ahead, and again, to be a risk going forward. Let's put that risk into context. Let's take a look at the next chart, and we can see government employment as a share of total non-farm payroll employment. You can see that government employment is one of the larger sectors in the labor market. Roughly 24 million workers work for the government, work for the public sector. That's 14.8% of the non-farm total. That's the third largest sector for employment, for non-farm payroll employment. Trade, transportation, and utilities is the largest. That makes up 18.3% of the non-farm total. Healthcare and education is the second largest. That makes up 17%. But government is the third largest, a very large sector. And so a risk here going forward as we see continued job losses in the public sector. And the most important point to make here, if we take a look at the next slide, the most important point to make here is that this is coming against a backdrop of an unemployment rate that is already rising. There's not a lot of buffer room. Labor force growth is already exceeding employment growth. Last year, the labor force grew by 1.1 million. Employment growth, at least in the household survey, the survey that's used to compute the unemployment rate, employment growth was 500, not 500,000, but just simply 500. We already have a rising unemployment rate. The jobless rate bottomed a few years ago at 3.4%, now at 4.0%. Labor force growth has outpaced employment growth on an annual basis in every month dating back to the spring of 2023, as you can see in the commentary here. So there's not a lot of buffer room to lose jobs in the public sector or in any other sector. The jobless rate is already rising. In normal circumstances, 20,000 job losses per month, 30,000, 40,000, even 50,000 job losses per month in the public sector wouldn't be a game changer. But in this case, the game has already changed. The unemployment rate is already rising as employment growth has slowed. So it adds to a risk that is already developing.
To watch this month's complete analysis and receive daily updates directly to your inbox, become a member at cycleframework.com.